The only thing that has been said in the past few weeks is pushing towards clinics, hospitals to be transparent with fee pricing.
Yeah. Apa yang perlu diadakan diagnosis related groups, ya. Itu di Malaysia ini belum ada lagi.
And there has been a straight away pushback. No, we don't need to.
Yeah.
And then second thing that came in, this position of this ballpark price of cost. So that means like if you come in for appendix, okay, this is the price. Maybe you're going to pay between 12 to 15,000. Anywhere you go, this is the price. You cannot go more than that. Like I said, in practice, not one treatment is going to be the same to the next person. It's going to be so different, and then that's going to also handcuff physicians on how they can practice. But as we were talking previously, so like there's also going to be like the best practice, not throwing a person into 10 machines just because I can.
Medical field ni nothing pancreatic cancer.
Bersama saya Dr. Roland Victor.
Benda yang and one of the worst stress can happen bila you makan tak sedap.
Doktor, saya punya culture kena makan nasi.
Zaman moden. That every second of your life you either earn or learn.
Batu Medic Show. Okay, episod kali ini dibawakan khas oleh Healthy Nation. Healthy Nation merupakan suplemen pemakanan penambahan kepada pelbagai jenis individu, antaranya ialah orang-orang yang mungkin berusia yang perlukan specialized nutrition. Dia ada Vita Well. Lepas tu Get Well adalah untuk golongan yang ada masalah celiac disease. Maksudnya mereka perlukan produk yang mengandungi gluten free. Yang ni Get Well ni memang gluten free. Flexwell untuk isu-isu masalah sakit-sakit sendi, dan ada juga Healthy Nation untuk DM Well kepada orang yang ada masalah dengan paras gula yang sangat tinggi. And Healthy Nation ni boleh didapati di kebanyakan farmasi, terutama sekali farmasi Watson. So untuk maklumat lanjut boleh pergi Watson dan boleh berbincang dengan pakar perunding ataupun farmasi di sana berkenaan dengan Healthy Nation supplementation. Okay, welcome to another episode of Lesungbatu Medic Show. It's me, Dr. Roland here, and today's discussion is something very hot about the cost and rise of insurance, especially medical insurance. We have seen that in the past weeks, so much of discussion, so many newspaper articles, discussion in the parliament, in the concern of the rise of possibility of 40 to 70% of the rise of medical insurance costs. And with me today, I have two special guests, people who are very senior in this financial industry. Mr. S.K. Sami, past president of NAMLIFA and also past president of the Asia Pacific Financial Association. And Mr. Techina Murthy, group manager of a leading insurance association of firm. Thank you so much for coming down.
Thank you.
At Lesung Batu Medic Show. So today kita nak start to Lesung. Okay, gentlemen, high cost of insurance, especially in the medical facade these days. We know that the inflation that is set globally is about 12%. Malaysia, they are recording almost to a 15% inflation, but I feel it's already at 18%, and this is not going to stop. Our concern is there are a lot of sick people that have insurance, and there are more people who doesn't have a policy at all when it comes to medical insurance. Where do we go from here? I want to start with Mr. SK.
Well, it's going to be difficult for people, very especially in the private sector, whereby they're not given any sort of medical coverage by the respective employer. So today, an average man's fundamental needs is medical, because that is what he's looking for. He falls sick, and today, sicknesses of various kind come into regardless of age. Those days we see older people getting certain type of heart diseases and everything. Today, a young guy, 22 years old, can collapse with heart disease.
Agreed.
So people are looking for medical card, not for luxury or what, but for proper attention. And so the need is getting higher. But on the other hand, people are also looking into the high price that is coming in. Entry level, the premiums are cheaper, but as you age, they call it the age group, it's getting higher and higher. So this is the biggest problem that all the health ministry as well as everyone need to look into.
How about you?
I look at it, I've been over the 30, 40 years in the business, financial services. I realized when we started off, medical insurance was not so popularly talked upon by insurance agents and also people most people have life insurance ongoing. But as time progressed, apart from life insurance, medical insurance came into play. And at that time, we had first introduction of the standalone medical policies. So when the standalone medical policies came, we all knew that there was a medical price increase that's going to take place every 5-year band. There was a traditional way of looking at medical insurance.
This is how long ago? Early 90s or 80s you're referring to?
No, I'm not talking about, maybe about late 90s. About late 90s. And so we had some basic medical insurance in place, but then it became more comprehensive and so on. So when this went on, then we had this standalone medical plan where everybody knew the medical price is going to go up every 5 years and so on. Those days we are talking about annual limit of 90,000 and 60,000, and then your lifetime limit is 300,000. Those kind of plans. And then time moved on, evolved, and we had insurance that came along with the investment link. So now when investment link came, the good side of investment link is the premiums were sustainable, or it is standard throughout the years. It's supposed to be that way. Of course, there can be medical reprice and all that, but we never spoke about this in the early years of introduction of investment link. So as investment link grew popular, people were not so keen about the standalone medical plans, simply because the price would go up over the years. So what happened? The investment link became popular. And as investment link went on, we realized investment link facing the same problem of medical repricing. And this is what now is taking a toll on people and also people in the financial services, because at the beginning when we started, we were not aware about this. Then the medical repricing, now earlier they were saying is going to take place every 5 years, and then it came down to 3 years. Now we are hearing annually is going to be revised. So it's alarming for people to look at this as it's no more something that is affordable to people. It has become a luxury product for people to own, as like what Mr. Sami mentioned. As you grow older, if your premiums are going to be that high, so how is the sustainability going to take place for people to maintain lifestyle and other things that are in place?
True. I want to jump back to what you discussed with Mr. Sami just now. When I give a very classic scenario. For those in government service, they are sort of like protected even after retirement. They can actually access any private facility, a government facility, and get most of the treatment done. And even like some semi-government centers, like maybe like IJN,
yes,
Institute Jantung Negara, they can get the services and just still pay back, paid for by the government. But now I give an interesting scenario where individuals who work in the corporate for maybe 30 or 40 years of their whole career, and then they complete their career at 60, and for the longest of time they had some form of medical insurance protected by the company.
Yes.
And when they check out on the first day of retirement, they are on their own.
Right.
And is there something that insurance firms or companies are looking into some form of continuity to also curtail the pressure of a spill-off of people now have no choice rolling back to government facilities because they cannot afford the luxury or the cost that they will incur in private sector?
I think this is a very pertinent question that you have asked that I've been dealing of late. Now, when you are in a corporate, you have we call it group medical scheme, and which is palatable, which is quite cheaper when compared to individual, and then the corporation or the company buys on the life of the individual. Now, the question arises when the individual is 60, when he leaves the corporate, what will happen is the medical card or the medical facility is terminated. What I've been asking companies also, if it is the same individual, the payer could be the company and the life insured can be the person, right? Now, why can't you extend the same coverage and the premiums paid by the individual to the company? You are not altering any of the plan. The plan is the same. Now, when you want to alter plan to a higher level, naturally your premiums go up. And then also your insurability comes in. This is the same person who is the entry level, was a healthy person. Down the lane, 3/4 of the guys have got some problem. And if they were to come in and buy an individual card, you will decline them because of it being uninsurable. But then at the inception, he's been there. And the company says, I'm going to employ you till 80, so his card is still continuous. So in utmost good faith, right? He has been, the company or the individual has been paying through the corporate for all while. Why don't you admit these people under the same scheme, but the premium will be paid by the individual, which all companies are denying now. So this is a bigger thing the companies have to look into. They are not losing anything, because if they are going to increase that premium, right? This guy also is also going to pay the increased premium. So it determines a fair selection.
It's almost like what I think you're saying, like almost like a CSR kind of thing, some form of continuity.
Yes.
For the individual who has been in service for so long time, and they manage to have like sort of like a concept of like an NCD kind of thing. When you look into vehicles, like, okay, you don't have no claim, your premium is low. But as what Mr. Sami expressed, and my concern will also be that Malaysia is, by 2030 we are heading to an aging nation. So we're going to have a more number of senior people compared to younger people at that point. So there is now a real high time for discussion of preparedness.
Yes.
People are always talking about pandemic preparedness and all. This aging society will be a pandemic that we will have to see, because you have not enough beds for government facilities, and these people can't afford to access out of pocket money to go to the centers. And if you were to be offered a premium at the age of 65, you know what's the price, and what are people going to pay? They're going to pay most likely 8,000 to 5-digit annual premium, with also selecting and seeing what kind of illnesses they have. Whether they have diabetes, they have hypertension, or they already had a previous cardiovascular episode. Let's just say like this scenario of Mr. X, who was working in maybe an oil and gas company. Maybe he's a welder. He had a cardiovascular incident. Maybe he was 55. Full coverage by the company. Once he retires, and if he chooses to go and get a premium, the only thing that he will say is, you want treatment, is out of pocket. The insurance company is not going to offer you any cardiovascular protection. That's the real scenario. So this is a real.
But as it stands, so you look at what Mr. Sami mentioned just now, with related to current insurance needs, I mean, the way to go forward for public, sometimes people are dependent too much on the insurance provided by corporate sectors. So this type of corporate sector providing insurance is always limited. So it's always limited. The amount of cover will be limited. And then the policies are yearly renewable, which the public are unaware, because they think that the continuity will be there continuously throughout. So even like in I've got some experience where the company look at the whole list of employees. I got say 70 employees. So I bought medical insurance for all. And I know that the claim is rising, because when the claim rises, there's going to be a revision of premium next year when the renewal comes. So when this takes place, the company would know who is the person that is making the highest claim. So if that one particular individual is making the highest, probably that person is taking the most amount of leaves. So what I will do, if I'm an employer, what would I do? How to get him out of the organization? Because he's going to rise my premium anyway. Okay, my premiums are going to rise every time the renewal comes. And I'm going to say this person is not healthy, or this person is taking too many medical leaves, or maybe even exclude him from the group insurance that I've bought. So exclude him, and when I exclude him, then my premium comes down, maybe by 50% or 40%.
Wow.
So the 1% could be impacting the premium. So, but then again, who has lost out? This particular individual has lost out. So the fact that the point I'm trying to make is, the corporate insurance is something that you can have while you are working, keep it going. But technically, you should have your own personal insurance that is running concurrently while you are employed. So that's the right way to go. I mean, based on what we have today and how is the positioning today, that's why it can't depend on what is provided by the corporate sector, because that's insufficient. Nobody is going to give you $1 million cover in your corporate insurance. So it's going to be 30,000 or 50,000, and in very rare cases I come across 100 or 200,000, which does not go to
That
every.
is, we are referring to the standard practice.
Yeah, standard practice. Most corporate insurance where they have a group policy for the coverage is only about 30,000, 50,000. Rare case, maybe you're a top employee, you get maybe 200,000 or whatnot. There is no $1 million cover like what we are talking about. Anyway, the issue of $1 million cover is also questionable now, because every insurance company is coming out with 2 million, 3 million, lifetime no limit and no limit and no limit at all. So where is it heading? So when that goes, so is there a premium being charged? So the flip side of this is insurance company is looking at, okay, I'm going to give you a cover of 8 million annual. So what are the chances of an individual hitting that 8 million limit that was given to me? So I would have bought, and maybe premiums are being charged. Okay, of course, in some instances they say this part, the balance for part is still given free to you based on the policy. It can be vary, but that's what they have done now, where the policy annual limits have gone to millions. So whether a person is going to utilize that millions or not. So the point is, the public is also getting paranoid. I need to have multi-million dollar coverage for medical.
And when you look at that, I can give a simple scenario of myself. When I had my first policy that has an investment link with a medical card, the coverage was only about 300,000, and I was actually paying close to about 500 ringgit. And 3 years back, when I evaluated this and realized, like, I think this coverage is not enough based on the inflation that is happening. I think if you can go into a private hospital today, and they will help you spend 300,000 easily, and then you are already maxed out for that year for claim. And then what happens next? And then you see the past couple of years, like you mentioned, like the premiums are going like 1 million, 2 million, and then the value I was going to pay most likely was just maybe another 100 or 200 ringgit extra from that. And I had to consider to let go of my previous coverage and pick up a new policy. And why do I see that? I mean, as a person in the medical field, in practice, you know that the whatever test or diagnosis, not just looking into consultation or procedure fee, which is already governed by Act 586 in Malaysia, you know, it's just increasing. And there is no choice, because the inflation is so steep. The inflation is so steep. Concerns about new medical technology, better hospitalization facility, nicer rooms, all kinds of shebang, and what kind of specific dinners, and multiple medical colleagues can always come and see you, hello, and then charge. And there's also this demand about newer procedures, newer diagnostic tools, newer technologies that we're going to use. I mean, like sometimes you can do a old school open abdominal surgery, but now maybe you have laparoscopic procedure. So the cost is going to double or triple up because of the procedure. Because in the act of the Private Healthcare Facility Services Act, they never mention like, okay, what kind of technique you can use. Maybe this procedure, this is the fee. So that's currently locked, and I still find it sometimes not fair to physicians or surgeons the fee that they charge. But the majority of the profit is actually made by the hospital facility themselves. The surgeons, the specialists, the practitioners are only charged for their fee of practice. The rest of it, lock, stock and barrel, goes to the thing. And how is insurance companies seeing this cost rising, the decisions to like appoint hospitals, meet the pricing fit demand, and trying to sustain that inflation, because we can't run away from the medical inflation. That's definitely the only thing I'm telling the public is, can we slow it down? Can we slow the inflation down?
Well, normally insurance companies are looking for new sales. Bigger the pool, then they are able to, just like in general insurance, the car accident claims are very high. Normally, lots of insurance companies depend upon the present premium to pay past claims. So when your pool is bigger, your sustainability gets better. If your pool shrinks, then your payout becomes difficult. So insurance companies are coming out with lots and lots of sales contests and everything, and luring the agency force to sell more medical policies. And one such is, as what Murthy said, at one time, your annual limit was about 300,000 is what you said, and your lifetime limit could be 2 million or whatever it is. Then in the course of time, your annual limit was increasing to 1 million. And it's a competitive world, so every company will compare with each other to have the edge in sales. So they removed the lifetime limit. There's no lifetime limit. And so as they increase the annual limit from 1 million, 2 million, 4 million, now 8 million.
8 million?
Yeah.
10 million, 10 million.
Now it has come to 8
million.
million. So if one company is 8 million, the other company's members are asking why, when the life insurance company can give 8 million, why not? So again, the actuaries start working, and they also come out with 8 million to stay ahead in a competitive world. Now, little realizing that after raising this bar to 8 million, the cost is pushed into the consumer later. Initially, 2 years offer, 8 million, no extra charge. But definitely, the CI, the cost of insurance comes in, and insurance companies is going to put. And that's another reason why it's increasing. So my fundamental, doctor, as you're in the business, I tell my customers, why do you need to raise your annual limit to 2 million? If you're going to claim 2 million, you're going to be a vegetable. Might as well you stay at home. No, seriously, you might as well stay at home, because there's not going to be any cure. They're just going to bleed your annual limit, and you're going to go. So that's not necessary, but because of competitive world, because of sales to be increased, companies have come out with this offer, which I find that is not good enough. Of course, if it's going to be inflation, there can be a slight increase, not to 8 million. And now the companies will later go for 12 million. Now, coming back to what Murthy said, doctor, it's a solution, because I like to use solutions. Like as private sector, if an employer, in order to keep my employees with me, because today there's a lot of headhunting comes in, right? And today generations likes to flirt around with various companies. In order to keep my people, I offer this a good medical package as a golden handcuff.
Okay.
So that they will stay with me, despite the promotions, despite the increment, despite the travel that I provide, despite the market I provide. This is another way of capturing the people, because I like to have my people not go away. So this is a golden handcuff. And in any medical scheme, it's called group scheme, the human resource department or whoever is representing can talk to the group scheme manager what he wants. In a group scheme, you can tailor-make according to what you want. But in an individual scheme, it's only this. If, for example, in a group scheme, you will have, in an individual, your hospital can be, maximum can be 420. But in a group scheme where large number are there, they can alternate whatever room and board you want, and the annual limit and your lifetime limit, everything can be calculated, tailor-made to you. So you have got a bargaining ground, because why most of the members of the society do not know, a bulk sum of premium comes into the company. When I have 10,000 people and they are taking this medical, big sum, whereas an individual is small premium coming in. So anytime a big loss comes in, the company is finding it to sustain. But here, I have a big sum of money, 20 million coming in or 10 million are coming in. So you can negotiate with the companies, saying that, well, this is a scheme that I want, and the retirement age for my company is currently 60, and I want my employees to continue with the same plan for the future. Of course, the undertaking of the premium will be the sole responsibility of my employee, who will be my ex-employee then. And when you talk to them, yes, they will consider, because nobody wants to do things outside the box. Why can't we do it? For example, I started the scheme. Why can't you give a blind insurance policy? The management said, yes, you can give the blind, but then it's not in practice this part of the world. I said, why can't you take the first step? Because a blind man is much more careful on the roads than a man who is visibly well, who can see well. Because his other senses are, as a doctor, are so sharp. Because I have not seen a blind man being knocked down by a car, but a guy who could see well, he has been knocked down by the car. So I said, you can bring some clauses that, for example, your disability cannot be more than this. Your death coverage can be so much, and the Association of the Medical of the Blind wanted the cover for all its people, but it was denied. But no reason. All right, physically as well, there's no sickness, nothing. It's only its impact. The eyes are impact. So what I would suggest is private companies negotiate with insurance companies, because you're giving premiums, to continue this policy when the person is retired. So that will bring about not having a parallel policy, as what we said. There's another solution. What Murthy said is good, because if I don't have after 60 and I want to buy after 60, what are the chances? Am I qualified? The question is, am I qualified?
Understand. Mr. Murthy, I want to ask you, currently at present point of this year, or maybe the last year data, how many % of our population has a medical card?
Percentage, I think he would have a better number.
In terms of insurability, life policies around 40-45. I think it's around 30%.
Medical card?
Yeah, less than that.
Less than that. So that means
coming back to the point that you mentioned about the price that's going up because of involvement in the medical field, this continuum is going to evolve. So when that evolves, definitely new technologies, so the treatment plan and everything is going to increase. So it's a natural progression for cost of medical to go up. So you can't avoid it, like what you mentioned, yes. But how are we going to slow it down? So I would like to take that one point that you mentioned. So we of course cannot eradicate totally this whole thing, but to slow it down, I think it all boils down to education. So education of the mindset. First thing is the consumer. So I have come across personally, like people, how can I get myself admitted? And then,
we know this question.
So how do I get, even for small things? I recently had a case where somebody had a knee pain. I don't want to pay a single cent. I want to get myself admitted. So I know you want to get admitted, then you need to have some condition for you to be admitted. You cannot simply say, I want to be admitted. Then you say, there are also people who are suggesting, medical people in the medical field, why don't you go and tell that it's an accident, you had a fall, and then
suggesting
some suggestion. So when this takes place, so the fellow goes to the hospital the next day. Okay, somebody told me this. Okay, I'm going to go and say I had a fall yesterday, therefore I'm going to go for treatment. So when you don't have the right ethics in your way of how you do things, you are putting the pressure on every policyholder. Imagine if everybody does, okay, I'm going to be admitted, I don't want to pay a single cent, because I know I need to claim a medical card, I need to be admitted. So definitely this is going to be, so this on the policyholder side. So you need to know you have to behave in a right way, ethical way, when there's a real medical need. And then I've come across people say, I want to do a medical examination. So you can't do a medical examination with your medical policy. It's not covered. But most people say, I had some sort of a chest pain, so I need to do some kind of test. And there, what people don't understand, there goes your insurability. So you are not insurable anymore. The moment you said you have a chest pain and I'm just there to do a checkup, insurance companies are going to ask you a lot more questions if you were to buy a policy in the future. So that's one part on the consumer. And then
this is something that a lot of consumers don't know, that this negotiation part is what I feel that it's technically a crime. Crime on the perspective of practice as practitioners, because now it's 100% looking like for profit, where you know that all you can now is like, get this guy in, I'll ward him because I have the power to ward him, run all the tests, and find maybe nothing or something small, and then call 10 of my friends to come and fix the problem because now he's in the system. But if this individual has no concerns, no issue, it's technically going to be like a highlighted point in his premium, where in the future if something really happens or some form of consideration at a very young age, maybe the policies don't meet the value, like example like myself, it didn't meet the value, and maybe if I would have admitted myself in the past just because I can claim with the conspiring myself inside,
correct.
And then I feel, the premiums are not enough, the inflation is not 12% or 15% or even maybe further than that 10 years down the road, I will not qualify for any form of services in the future. And this is so dangerous because then we see whatever being practiced through the medical system is causing a lot of hurt for you yourself in the future.
Correct, true. Which people are unaware.
Yeah, Doctor, coming to what he said, ethics and compliance are of the most important aspect on any business. Now, consumerism education is very important. I do educate all my team of people wherever I give talk, emphasize this. Insurance is a common pool where the risk of a few are shared by many. If the risk of many are shared by few, the insurance system collapses. So people need to understand that. He said, I'm contributing to this, I want to claim. So if everybody starts claiming, well, insurance companies are not a charitable association or companies. They are there to make profit. As what Peter Drucker said, profit is the criteria of every business. They are made to make profits. The moment they see their profit is shrinking, the alternate channel is increase the premium or decline renewal of that person, very especially in standalone policies that comes in. That's why more and more people are putting into investment-linked policies. So continuous education to consumers saying that it is a common pool. If you are really sick, you go. For example, I have a card, let me go in. And sad to say, admission is done under normal conditions. Admission is not necessary because the card pays only on admission. So a person who could have got a day treatment is unnecessarily admitted for diagnosis, which is not so important, and that also increases the amount of money paid by insurance companies.
True.
That's on the consumer side as well. So one part is the consumer, so who is not the
winning buyer, winning seller.
Yes,
correct.
That's the problem.
So the other side is the insurance agents themselves. So they are also partially, some of them are not giving proper advice to people. Some of them are no. So why don't you get yourself? I mean, they are not educating the public in the right way. So that's also another thing. And then what about medical practice? People in the medical. So if I see there is $1 million in limit, am I lured to make an admission possible, to make a claim out of the insurance? I mean, I'm just questioning this.
That also now comes towards the back to the insurance companies who are the paying master towards this medical entities. Like how good, as you know, as a person in working in Asia Pacific, experience as president, how good are compliance of insurance companies, the teams there, able to track the costs and the due diligence of, this is a legit procedure, or this is something that we can smell from far. Because one we have this issue of sometimes like you said, like that honesty of the compliance and services and practice is one big question. Second thing is how trainable or how good equipped are the policy providers able to catch like an audit kind of thing, because the only thing that has been said in the past few weeks is pushing towards clinics, hospitals to be transparent with fee pricing, and there has been a straight away pushback. No, we don't need to. And then second thing that came in, this position of this ballpark price of cost. So that means like if you come in for appendix, okay, this is the price. Maybe you're going to pay between 12 to 15,000. Anywhere you go, this is the price. You cannot go more than that. But like I said, in practice, not one treatment is going to be the same to the next person. It's going to be so different, and then that's going to also handcuff physicians on how they can practice. But as we were talking previously, so like there's also going to be like the best practice, not throwing a person into 10 machines just because I can sign to
Certainly,
use the.
Now, being the chairman for the Asia Pacific, I have about 9 countries under my umbrella. I've just finished my chairmanship. From 1996, our countries all over Asia Pacific has become into self-regulation. That means the operating cost control guidelines of 1996 came into Malaysia, which came earlier in Singapore, to regulate the insurance market, to be ethical, to keep clients' interest first before anything, and also to cut down management costs as well as salespeople's costs, so that premium can reduce. I was part of it. I was in the negotiating team with Bank Negara Malaysia. Now, if you compare to Asia Pacific, I would put Singapore at the top level. Because in Singapore, as a insurance advisor, when you come in, you have to go through various examinations before you're given a contract. For example, to sell basic policies, you have to go through investment-linked policies, investment-linked exams. Then you have to go traditional policies exam. Then you have to have a fit and proper. You have to answer. And then for medical insurances, there's another exam. If you're going to sell medical insurances and critical illnesses policy, these are correlated, right? You have to sit for another exam. Why this exam? Because these give you an awareness of how each particular disease or is diagnosed, what is pre-existing, what is congenital, what is non-disclosure, right? For example, I have been having headache every month. Every month I have. Do I disclose? Yes, you have to disclose, because there's something looking into, because it could be a leukemia being developed inside. I had a client who died of that, right? So all this has to be done, and Singapore monitors the agency force. Every footstep of the agent is measured. Every footstep of the agent. You give one wrong advice and reaches, they call it MAS, Monetary Authority of Singapore, equivalent to Bank Negara here, you're called. You're called in with your insurer, and the investigation goes on, and you found, you're immediately terminated. No looking back. No looking back. So that sort of things, anything that is well planned and ill executed will never come to have a good way, a positive way.
So maybe in Malaysia, doctors also should sit for this exam.
I think so. Agents should be well trained by companies, again and again, not just to focus on sales. While training is there, have I done the best for my agents? How do you do a check and balance their agents? You can pick up and say, can you tell me why did you give a medical card? And agents have been aware. Why did I give? You must have a rationalization. Why? The reason why I gave. So once you keep educating the agents to a different level, and I think consumers are automatically also educated, and then the claim ratio will come down.
True. And when I want to stay with you, Sami, is when you look at Singapore, they have this CPF system, sort of like a Malaysian EPF, and a medical protection is also included into their system. Correct me if I'm wrong. So how does that work there in terms of that model where they have like there's government coffers with the CPF where you can use it for housing, you can use for retirement, and also you can use for medical claims. And you have a national system of medical services, and you have also the private hospitals. How does that work there?
Like for example, if you are a CPF contributor, there's a certain amount of amount you can claim under critical illnesses.
Okay.
And then the national scheme offers you additional medical payment. You have taken a medical card under the NHS.
Okay.
So that it works. But here we do not have a national scheme.
Yes, that's the next question.
Which has been talked about for a lot longer years. We do not have a national health service scheme.
And when we look into this topic of national health system or national health insurance or healthcare, you've been serving for a decent amount of time advising the national organizations, Securities Commission, Bank Negara and stuff. I'm pretty sure this has been brought to the table many times, right? How do you see the private insurance working together if for one day I pray that this happens fast? How is this going to integrate? Because that's going to sort of create an umbrella for everyone to be protected. Of course, we have a situation of a B40, now it's B60, T20, and T10 kind of situation in Malaysia. Now they will have maybe the next premium category for people which they say look, we don't want to protect the T10, the higher or more affluent Malaysians, that they cannot fall back to government service, or they have to pay maybe a higher service charge for things. So what along the years, gentlemen, what have you all seen? Will this materialize? Can this help fix the problem, or is this the problem fixer?
No, but it's not just alone on the medical repricing because of cost of medical that's going up and all that. Of course, there have been some due diligence done by the company and also other organization to put things right, so that it doesn't rise that much and all that. But looking at the fact that what insurance companies have done so far that I know, done, so I've seen that they have also put people to check whether those bills that have been submitted are properly done. There have been some not only that, also looking at the agency force, the behavior of agency force, whether somebody buys a medical insurance, is the underwriting done properly in the market first? Because mostly the first underwriting is done by the agent themselves. They are the one that is talking to the consumer. How is your health? Do you have any medical? But that's a critical part of the insurance process, which is very important process for in the buying process. Because when you buy that, if the agents or the person who's advising the consumer doesn't do a good job by not taking down enough information about the health, then the underwriting goes wrong. Even the information submitted to the companies, this indirectly impacts, there's going to be claims. Okay, so what most people, agents, they want to do a quick job, they will sit down with the consumer and then they talk to them, give them advice, okay, do you have any? Most consumer will take these questions very lamely. They say, do you have anything? No, I got no medical condition. I got nothing. Everything answer is no.
They don't want to pay an extra.
Yeah, so
that's the thing.
Yeah, that's true. But then again, that is the one that is going to impact the claims later on. You see? So, and to make it worse, there have been cases where, quote unquote, people who have not done the right way, people have done things the wrong way, maybe getting not the right medical report, hiding certain information, which indirectly is going to impact the rise of medical premiums as well. So, and the insurance companies also have they have got the team of people who are doing the due diligence at the back. I mean, I can see over the last maybe 10 years also, lots and lots of work insurance companies have put behind. All the major insurance companies, they have put behind a lot of work, the infrastructure at the back to facilitate claims and so on. But then again, these things are, we can't avoid this from going up. So definitely the insurance agents, the consumer, the insurance company, like what you said, being transparent, which is not going to happen very soon, anytime. I hope it happens. So why the medical reprice is taking place? Now, one point that I want to make, when it comes to the medical repricing, the medical repricing in investment-linked policies takes into account the sustainability of the policy. The sustainability of the policy is up to age 100 in most cases, or 80.
Okay.
So the question I'm asking is, when you make a decision, you are taking the policy to be sustaining meaning there needs to be a cash value in investment-linked policies. So now, are you taking the sustainability until age of 100, where the lifespan of the person may not even reach 100? You agree? So, if I'm going to die at age of 75 or 80 or 90, for example, why am I paying premium for the years that I may not even live or be alive?
Okay.
So that's the other thing that I'm looking at. So even to some of my clients, I'm saying, as long as you got some healthy cash value, you don't have to, immediately follow what the insurance company is saying, okay, increase the premium this much, you take into account. So I say, maybe if you can, maybe take 50% of it, increase maybe another. If they say increase $100, maybe you increase by 50. Or you don't do anything if there is a healthy cash value. Of course, they are taking sustainability until age 100. What if I die at age of 60? So I'm paying future premiums for the medical condition that I may get into at age of 90 or 80, which I may not even be alive.
Yeah. What Murthy is suggesting is, why charge till 100? Because the average mortality rate of an individual in Malaysia is 79 for a male and 81, 82 for a female. Yeah. So why don't you take a charge till then cross the bridge when you come to it, rather than charging? We wouldn't know how many of us will survive at 90 or 80. But then you are charging till 100. So it's a valid point that companies should look.
I see the point, but maybe like as you looked at the upper bracket, I'm looking at the lower bracket. Okay, the justification is here. More younger people are getting sick these days. Like you mentioned, early 20s, they're coming with some cardiovascular issues, diabetic, hypertension, and that leads to more other problems like growths, other organ dysfunction that may need surgery, dialysis, and so many things, because certain policies protect so many perspectives. Some even provide like dialysis lifetime support and stuff. I want to still get the point of national health financing system. How much have we done here so far? How much have we done here in Malaysia? Like when you mentioned about Singapore just now, I can sort of like see that they've already had sort of like an on-riding policy where you can take on by the government to give you some more extra protection, or maybe added on value services where it's sort of like adjunct to your CPF. Correct me if I'm wrong, and that's pretty interesting, because if we're looking at Southeast Asia as a benchmark, then of course looking at Singapore is very fair as a financial hub and an insurance hub. We can see that they have the strength, expertise and knowledge, and a smaller population to run a test and see the functionality and doability of insurance services. The thing that struck my mind is like this just came spontaneously, like a scorecard, like an NCD, where maybe if I was 26, I took a smaller policy, I didn't use it, and I'm offered certain either national examination screenings where I go through the screening and I get like sort of like a merit, and that allows me like a ticket to access options, just like how you have a cellular device. Let's just say you still want to maintain your telephone number and move to a different operator. You can today. Let's say you want to move from A
with
to
the same
B,
number, yeah.
with the same number. So does the insurance companies, they have organizations and stuff. They not have like sort of this bridging thing to be discussed in the future? And when health financing system comes in, you're going to have a certain amount from the national budget coming in, and then you're going to have like everybody sort of like maybe certain criteria or certain parties, for example, like government servants, the government takes the policy. For certain people, for certain tax paying bracket, they take a policy. And then for private companies, they also take a policy for their staff. So then everybody goes into this umbrella. But I don't know how the insurance companies are going to see it, because hook or crook, we have to be really ready for the national health financing system, like Bank Negara, Securities Commission. They have to start initiating this discussion, because that allows, like you see, like when you look into sustainability, when you rightly said that investment link, you see, we just cannot have a fund or coffers just for the sake of here $20 billion, 20 billion ringgit just to pay for bills. Who want to get sick, please come and get sick. That's not going to be the way. The system has to build on itself with the funding. That means like if the government has to open more hospitals, more clinics, more specialists, then this pool has to evolve to also fix the future problems. That means like fireproof 20 years down the line. If not means you see like insurance companies, they have the fund, they get the fund. When you look into investment links, okay, they have to hedge it, take it to the stock market, take it and invest, take the money and invest. That's how insurance will work. You can't be just sitting on hoping people to get problems and then dash out cash. It doesn't work that way. You need to invest it. So there has to have some form of fabric ready.
But now the national scheme, they only have a critical illness cover, right?
Yeah. On the EPF.
So they don't have any sort of something like a comprehensive medical. But of course, like what you mentioned, the ideal option would be, whatever the organization may be, I take the pool of the risk all together, Malaysian population together. No division between insurance companies, no division between products, because the natural repricing is taking place because of portfolio thinning. You see, the portfolio thinning is what? A particular product that has been sold maybe 20 years ago. So where people in that pool, many of them have grown older, so claims are rising in that portfolio, and some people have lapsed the policy in that portfolio. Okay, and most people have grown older in that portfolio, and there are a lot of uninsurable people in that group. So insurance company will look at that portfolio, is it making money or not? That portfolio meaning that particular product that was sold 20 years ago. So the medical repricing on that portfolio will be much higher compared to a new plan. So even in some cases, I've seen the newer plans are cheaper than the older plans. If you look at the cost of insurance that's been charged on the older plans are more expensive than the newer plan. So why is that so? It doesn't make sense. If I'm age of 50, I buy a newer plan, it's cheaper than having the older plan, because the older plan costs have risen because of portfolio thinning. So now when this happens, the ideal option, okay, I cancel this and go for this. That will be right. But I again have to look at waiting period. I have to look at the exclusion clauses, and then I got to look at whether I'm still insurable or not to go for this plan. So there are other issues.
But in a national health financing system, there won't be.
So
there
if you
cannot
look
be
at
exclusions. Everybody is in.
Because when you look at a national financing or whatever, so you look at the whole portfolio together. So then everybody is in the same pool. So now that is not happening in the setup that we have currently. So everybody there are multiple insurance companies that you can buy from. So division's already there. So my portfolio based on my policyholders. And not only that, I'm looking at by product. There's another division there as well. So that particular product cost is going up, so premium rises. So obviously, every product in the market is going to experience medical repricing over the years. Because when people grow older, definitely the portfolio is going to become weak because claim is going to rise, definitely. So, and also people are getting older and uninsurable, and policies are going to lapse. When policies lapse, premiums are not coming into the portfolio anymore. So
and that's dangerous also for the people who had those loyalty towards their old policy, not reviewing it. Sometimes we just buy the policy and then say, no, I'll think about it 10 years from now, 20 years from now. But then when they actually go in from a person who was in the early 30s and never had a problem, and then go into their late 40s or 50s, and then some form of medical issues happen, only then like get my policy out. Let me see what I can claim and stuff. And then like, look, can you imagine like 20 years of inflation? What will be the value of the service?
Yeah.
Almost negligible. But that also creates like, based as a past president of big organizations of insurance and finances, are insurance companies welcoming a national financing system, or they're going to lose a lot?
Definitely, when a national financier comes in, you are encroaching into their territory. They would not be that happy. But then eventually, insurance companies will be involved in the underwriting. Now, if it's under Kementerian Kesihatan or whichever it is, they have to have underwriters to undertake your case. So all insurance companies will submit to what level they can underwrite and what the number of facilities or whatever they can give. So they still be involved, not wholly, partly.
I see that there's two sides of the coin for this. One is they maybe lose out in terms of the volume of profit they can get on one side, but on the positive side, the cake just gets bigger. Everybody comes in under the umbrella. Everybody has to subscribe or consume the services in order to access the healthcare facility. So whether it's people who are trickled out, at least the government comes in and say, look, we've got this much of allocation to protect those who cannot afford some form of protection. And that's I still see a 50-50 like. You win some, you lose some kind of thing.
The flip side of this is, although we are looking at, when we talk about insurance, we are talking about risk. You are passing on a risk to an insurance company. So when I look at risk, if I am an insurance company, I'm looking at all the risk that is coming to me. You are not passing me a bag of a present, you're passing me a risk. So now I'm taking risk. So I want to see which is the most desired risk. So when I talk about desired risk, I'm talking about risk that has got no claims, all low claims. So is a medical...
Happy claims.
So things that I know it is possible to happen, but not the frequency is not that high. So if you look at even general insurance companies, motor insurance is not a desired risk. So you look at life insurance company, medical is not a desired risk for insurance companies. It's not, but because of market requirement and needs and all that, they have to get into the play of medical insurance. And medical insurance give them a high threat for high claims. There's going to be definitely is going to be high claims. So they know, but insurance companies cannot do away from not playing the game. They have to be in the medical insurance, because you look at, I've heard even like some people saying, okay, now when it comes to insurance, people look for us. At one time, the agency force were looking for people. We are the one looking for people. Who is going to be my next client? So we knock on doors. But today, it has turned. Of course, when it comes to medical insurance, many people have received call, I want to get a medical insurance. But this medical insurance, although it's easier in sale, but it's not a desired risk for insurance company.
Now, what is the data showing? How much is the payouts at the moment? How many percent payout from this medical cards today? 20%, 30%?
No.
Well, according to Liam's latest report, right, as the CEO of Liam said, for every dollar collected, 90 cents is being paid as a claim.
Really?
That what he gave to a press report. So that high are the claims. So in order
That's really high.
To make this sustainable, more premiums has to come into the pool. Otherwise, then they have to scrape off the scheme or call for higher premiums. That's one of the reasons.
Wow, that's
The larger insurance companies are experiencing about total premium collected. So the total payout of the claims, medical insurance amounts up to about 70 to 80%. That's what in the latest reports of insurance companies, 70 to 80% of total. Because when it comes to claim, you talk about death claim, you talk about critical illness claim, or you talk about hospital income claim, and then you talk about medical claims, So when you talk about that, medical claims amount to about 70 I'm being modest, 70 to 80% of the claims come from medical insurance.
Because see, the other kind of policies, I mean, the actuarians are more way accurate to calculate. That means, for example, you're taking a life policy and stuff. That means like you're not most likely going to pay tomorrow or 2 or 3 years down the lane. Maybe it's going to be 30 or 40 years or even 50, 60 years time. So they're able to take this bulk value and reinvest. So then there's X20, X30 for the thing, and then you also get back some form of dividends and everything from if it's an investment link and stuff to sustain the premium that you're putting. But it's absolutely different when it comes to
medical, because
medical.
The claim ratio is very high.
Very high. So before we wrap up, any last words before we wrap up?
Last words. I mean, like I speaking based on your point. So we can't totally avoid these from happening. So it's going to happen anyway. So it is important that everybody play their role. So when it comes to consumer also have to take responsibility. Similarly, the agents also have to play the role of educating the public. And also coming back to insurance company, you also have to be transparent and don't be profit driven. Hopefully it's not profit driven, because when you say the medical reprice taking place, then the next news come out, you are making another huge profit over last year. So it contradicts. So people are questioning, hey, you all are charging premiums high now, and then you are reporting that your profit ratio has grown by 30%, 20%. So it contradicts. It's just consumers are questioning. And also lastly is the medical field. People, doctor, so the people in the medical field also have to play the role of educating the public. When you have insurance, don't simply, I've seen cases where people had, when they admitted hospital and then they came out, they say, I will pay this bill. The bill was 3,000. And then they said, I will use my medical card. The bill went to 6,000. So why is that? So I don't understand the reasoning behind. When somebody comes to hospital and you are paying by cash, the cost is 3,000. When you use a medical card, it becomes 6,000. I mean, even if it is going to be extra 500 or maybe even 1,000, still acceptable, but not 100%. 3,000 to 6,000. I don't want to quote the hospital, but it has happened in the past, in my experience. So if everybody play their role, definitely I think we can, slower down the process of, medical repricing.
Mr. SK?
Yeah, I'll go about what Tashna, I'll echo the same thing. Number one is the consumers. Consumers must comprehend how an insurance policy works, and every insurance company is there for profit, but they cannot go under loss. So consumers must work, and I would recommend a co-insurance to come in. When co-insurance comes in, what will happen is, doctor, that all right, this is in cases that we have handled in life. When a person is paying cash, or he said the co-insurance say 10% of the total payment, right? Say 100,000, he has to pay 10,000. The patient stands to argue with the registration desk or the reception there. Why did you charge for me this? Sometimes cosmetic tools are given, like your toothbrush, powder, and all unnecessary. Towels are unnecessary. Blanket is unnecessary has been given. Why did you give? And hospitals have cancelled it. And so they have reduced the bill when consumers argue, because consumers is also part of the claim. When you become a part of the claim, you feel the pain. You're not part of the claim. In Hindi they say chalta yaar, it's okay. So There must be a co-insurance to make sure that consumers also part of it. And consumers shouldn't say that just because I've got a card, I will exploit it. Use it well. That is consumers. Agency has to be trained very well on the importance of various aspects of claims ratio and everything. And again, I would suggest a tripartite committee would be sent between Kementerian Kesihatan, the Malaysian Medical Association and the insurers. They have to sit on a quarterly basis to look into how things can be done well. For example, doctor, in Thailand, if an accident takes place, any hospital ambulance is FOC. They don't charge because it's an accident case. Every hospital is supposed to supply their van to fetch the patients to wherever they need to go. So that is how it is. Here, the ambulances charge. Every department has become a profit-oriented department. X-ray, how many X-rays I'm doing? How many MRIs I'm doing? Surgeon, how many surgeries I'm doing? By virtue of contract, they have to do so that their bread and butter is safeguarded.
They meet the quotas.
Yeah, not only agency has got quotas, doctors have quotas, right? So when all these parties can work together and continuous education through various social media on the importance of insurance, what it is been done, then the whole thing can be well. So insurance companies have to play their part, and agency has to play their part, consumers has to play their part, and the governing body has to play their part. Not only I rock the cradle when the baby is sleeping, when the baby is crying. When the baby is sleeping also, I need to do my innovation, my investigative studies, my analysis, how to improve further lab for my rakyat.
So that's wonderful, and I think I want to conclude in terms of the core payment. I like to use this word core value. Core value in terms of, as a consumer, how do they protect their own wellness? How does the insurance company support that system where there is some form of gating? That means like you try it yourself, and like how NCDs are given like a kickback, the value has to be there as people learn to take care of themselves. Not talking about I have a policy, I must abuse the policy. So it's like, oh, there's an allowance for me to get sick, do not take care of myself, and then just because I have a policy, this is almost like an abuse of system, because the system is finite. There's a lot of stakeholders: the consumer, the people, the rakyat, the providers, the insurance providers, the service providers, the medical facilities, the expertise, the physicians. They are also accountable to the system. And if we're going for national health financing system, only then we bring everybody together again, because you have to protect the public who cannot afford full on, because they always go to this sentence of universal health protection. It's just nice to say it, I think, but in reality it's expensive. So we have to have a tier to protect the public. We have also a tier to look at how we want to reduce health burden. How do we reduce sick people coming in? That's also going to be the task of all of the stakeholders. It's not this big, like I'm just going to pay the bills. You pay the premium, I pay the bills. That's a left hand, right hand thing. No, it's the products and services have to have everybody brought together. Then only the possibility of controlling the inflation we can mitigate. If not, it's a time bomb. Okay, thank you so much for watching this episode of Lesung Batu Medic Show. Thank you, gentlemen, for coming over. It's a good discussion, and I hope people out there, you get a real clear picture, a real dynamics from people who come from a very illustrious insurance background and knowledge and experience, not just locally and also internationally, and a perspective for myself as a physician who have a lot of interest into national health policy. So until then, kita lesung kau-kau.